because by attending this show, you are going to get an edge in the market and be able to increase your win rate. And that's just the tip of the iceberg, because if you join our premium services, you are really going to get the edge that you need. So, without further ado, let's start this daily edge. So, today's UK GDP was the year over year was actual great was 1.8% versus 1.4% previous, at an estimate of 1.8%. So the actual number came out as estimate. And the quarter over quarter, it was a 0.5% versus 0.2%. Previous and an estimate of 0.5%. So big win on the UK GDP. And the trade balance, the actual was minus 13.65 billion versus minus 14.12 billion, and an estimate of 13.70 billion. So of course, good trade balance numbers, because it decreased from minus 14.12 billion to minus 13.65 billion. So overall, great numbers coming out of the UK. And now that we have seen these numbers coming that came out of the UK, why don't we start by looking at the GDP versus the US dollar, and then where it's trading at. All right. So this is my chart on the GBP versus the US dollar. All right. And if you notice, the GBP versus the USD has been trading, and sellers have been trying to go below the 129.90 level, which is this red line right here, or the range. And we are trading inside of what seems to be a bull structure. Okay, I know it's too short to determine if it's a bull structure or not, but we are making higher highs and we are making higher lows, which means that we are in a bull structure. And should we break with previous area, we of the entire move to the downside, which is a bearish structure. But the immediate structure is a bullish one. And the good thing here, well, there are two good things here that I see. One, this is a very important zone. All right, well, we were looking at this zone on the premium community, or our on the premium Forex community, as a possible buy opportunity. The reason that we were looking this as a possible buy opportunity is because this is a previous point of control. If you don't know what point of control is, well, it's simple. A point of control is the exact level where the most volume has been traded in the past. Okay, and this was a previous point of control from a previous from a previous period. Okay, and well, if you don't know anything about volume analysis, you're more than welcome to join our premium community. And there are some great educational content that I've created and that I'm going to create about volume analysis, which is, by the way, one of the biggest flaws that amateur or non-professional traders make when analyzing the markets, because volume zones are where big money almost always is placed. Okay, so these zones act as magnets for price, and these zones are where price has the best or has the highest probability of a bounce. Okay, so this zone right here was a previous point of control, only that, but it was a zone that when if we go all the way back here, actually, it's a zone that has been tested as support times before we broke to the downside and was tested as resistance, or where sellers jumped in. All right, we broke it to the upside and we tested it once, and now we are trading around it. So Not only that, but we have hit the 113% retracement of this move. All right, of the A to B move. So this is by no mean um, an Elliott wave count. This is just to point out where the start and the finish of the move that has calculated this Fibonacci retracement. All right, this A to B move is the last leg up, or the last leg up. This A to B move is the last leg up, and we have retraced 113 percent, which is an unusual target, but because it confluences with this big zone of support and this previous zone of high volume and the bottom of the bullish structure, it is, it is a level to consider. All right. We could also go and calculate the projection or the expansion of the first leg down. And why don't we do that? This is the first leg down, right? Okay, boom. So we go from B to what I'm going to be calling C right here. And we're going to go to, this is the low. We're going to look to the properties of the expansion. Where are they? They're right here. All right. So let's see where we are at. So this is the 161.8. And we want to see if this is something like the 213 around this big level of support. And the reason we do this is because when we trade with ratios, let me just change the color of this Fibonacci expansion or extension, because this is too, we need a brighter tone because we have um, a black chart. So basically, the reason we do this is because, I trade with ratios too. Okay, I believe that, but well, I don't. It's not a church or a religion that I'm pushing you guys. So I will not use the word I believe or the phrase I believe. The reason that I use ratios is because it has been mathematically proven that they repeat over and over specific ratios. If you know my kind of trading, you know that the 61.8 to 76.4 ratios are where I look my buy or sales areas for a continuation. The 113 percent or the 213% are sometimes targets, etc. Again, if you join the premium community, you're going to have access to me, and I share charts every day. And of course, if you have any questions, I will answer about my charts, my ratios, or etc. I will answer them right away in the premium community. So basically, this is a very good zone. So let me just put on the C here, because I'm going to be referring now the first low of the first leg down as the C point. All right. So the 213% retracement right here. All right. The 213% retracement is the expansion of the B to C move. All right. So this is a 213% expansion of the B to C move. Not only that, it is a 113% retracement of the last leg of the A to B move. We are, I'm sorry, not a possible, but at a historic area of support, and not only that, at a historic volume. And not only that, but we are at the bottom of this immediate bullish structure. So everything that I just said to me screams a bullish continuation or a great opportunity to buy the GBP USD. Okay, and then not only that, but because of what we just saw in our newest terminals, that we had some great, well, some good trade balance numbers. We had the trade balance decrease from, it was, what was it? From 40, almost a billion, right? £1 billion. And we had, and the GDP increased about 0.5%. So everything that we have just saw points at high probability buy on the GBP USD. If actually, uh, we at the premium community, we are already long, and I mean, this is a free gift for you guys. If you want to take it, you should take it. If my analysis makes sense, or if it justifies a trade idea that you already have, yeah, I mean, you should take it. The probability of this going our way, it's high, and of course, no one knows what's going to happen, but I feel confident in this analysis, as I do in every single one of my analysis. I mean, if I post something, or if I share an analysis, is because I feel confident about it. I mean, I spend my days looking at charts, and I only share a few per day, not because I want to hide what's going on 100% of the time on my terminal, but because if I don't feel confident about an analysis or a level, I won't share it. And I mean, if let me know if you feel, or how do you feel about what I just showed you on the GBP USD, if it makes sense to you or not. But again, this is the way that I analyze the market. So what can we expect of the GBP USD? Just let me change the properties of my trend lines to something like this, because I am going to be showing you some moves. All right, what do you expect from the GBP USD? We already saw that this is or this price action right here shows good rejection of these levels that we were talking about. Okay, if we move higher, of course that we are going to be encountering some type of resistance right here. All right, we are going to be encountering some type of resistance right here. And the reason we are going to be encountering some kind of resistance right here is because this is a previous area of resistance. All right, guys, if you excuse me for just a second, I will be right back in 1 minute. All right, I'm back. So, sorry about that. So we were talking about what to expect from this possible bullish move on the pound, right? And what we can expect is some kind of some type of resistance at the 131.15 to 131.20 level. But that would yield about 100 pips to the upside. Okay. Now, are we going to be looking for a continuation higher than the 31, than the 31.15, 31.20 level? We don't know yet. But in the premium community, we are definitely going to be taking half of our position here, moving our stops to break even, and wait for a continuation to the upside that might come after a retracement to these levels right here around the 30.70 level. All right. So basically, this is a possible scenario on the pound versus the US dollar. Again, this is everything that we show here on this show and everything that we discuss on the premium communities are possible scenarios because no one knows where price is going to go. No one knows future auction, I'm sorry, or if we are going to have data that is going to compromise our view on the market. So we have to be prepared on that. But this is what we are expecting at our premium community. So we're going to take half off at the 31.50, 31.20 level and wait for maybe a retracement here. If we have a big push to the upside, like we did on the A to B move, we might actually just break above without any kind of retracement. And we could be breaking above the previous high, and the retracement could be to the area that we just broke. All right. So these two possible scenarios are the scenarios that we are looking at. We are definitely bullish on the GBP USD, but if we break below the 113% retracement of the A to B move, which is this low right here, or the 29.65 level, we are going to change our bias, and of course we are going to be taken out on the loss because that is where our stop losses are positioned. Now, moving on, if you have any questions about the pound versus the US dollar, feel free to ask it or ask me via the chat. But if you don't have any questions about the pound versus the dollar, I am going to move on. Now, let's talk about gold, all right? We always talk about gold in this show, and the reason is that it is one of our favorite, it is one of our favorite um, products to trade. I'm sorry. Uh, what are we looking at? Well, yesterday on the show, we said that after this fake out, let me point out the fake out right here. After this fake out, we just delete what we have here. After fake out of this or this or bullish structure, we definitely um, will be looking for a bearish continuation. But the market looks very strong around these levels. I mean, sellers definitely tried to bring price down, but in price action, we are still making higher lows and higher highs. All right. Well, right here we made a lower high, but I mean, we are not going to be analyzing every little high or every little low to determine if we are in a bullish or bearish structure. What we're going to do is we're going to look at levels. Okay. Now, the levels that we are looking at are simple. The levels we are looking at are between the 1286 and the 1288 level. All right. This is our zone. This is the zone was previously tested as then we found high volume trading around the same zone before we broke lower, then twice right here, and then we faked out of it, and now we are testing it again. So what does this tell me? It's very simple. This tells me that this is the make it or break it area. What does this mean? Where the make it or break it area is simply the bullish or the bull bear line of division. All right, below these zones we are bearish on we're on gold, and above this zone, we are bullish. Okay, now to me, there is no trade right now. We are in a very choppy price action, but we are still below this zone, and we are kind of in a continuation pattern. But also, I'm going to eliminate it because it doesn't mean anything right now. Now, is this big range, all right? This big range right here. From the highs of 1288 to the lows of 1269, it is a big range that we are trading in. And right now, there is a big battle between bulls and bears at the top of the range. We already tried to fake out once, and boom, bears slammed price down. Then bulls to control again and are trying to are trying to break above. If we really break above, I would need a close above. I mean, in order to consider this a bullish, uh, a break of the bearish structure and a new bullish, we would need a 4 hour to daily close, it would be better a daily close above this level, and then a retest of the level, and then and only then would I be looking for a buy in gold. Now, this is the technical side of the gold chart. But what we're going to do right now is we are going to look at the US dollar index chart. All right. Let's have a look at the US dollar index chart. And the reason we're going to have a look at the US dollar index chart is because the dollar and gold are usually not 100%, but very likely correlated, but inversely correlated. This means that if the price on the US dollar moves up, the price in gold moves down. And right now, I mean, I'm going to delete some of my lines here because some of them don't make any sense at all. The red line, we talk about this red line, the 97.70 level, every day in this show, and the reason is that this is the exact level that was capping the US dollar or the US dollar index to the upside. And we did break with it and went all the way to the 98.30 level, but then price got slammed down, and then we broke again, but made a lower high, and then we are again capped by the 97.70 level to the upside. To the downside, we are capped by the 97, around the 97.25 level, which is this dotted purple line. So we are in this strange range in the US dollar. All right. This was during the yesterday's US PPI numbers. All right. We actually traded this. Well, we didn't trade it live, but we were live in this show while these numbers came out, and there was no reaction. But this bearish reaction, or this big bearish move to the 97.25 level occurred during the New York Open. All right, and now, as you can see right here, price of the US dollar index is moving heavily to the downside now. And let me just thicken this out for you guys. This is the 1 hour chart, and as you can see, bears are trying to break with the 97.25 level again, and that is going to be good for our pound versus US dollar idea. But if we go back to the charts, I imagine that gold is pushing higher, and as you can see, again, gold is pushing higher. All right, and this is because the US dollar is going down. But we are still not bullish in gold. We need that break above this level and a clear close above this level, and a move to the downside. Now let's move to the US dollar Japanese yen. The US dollar Japanese yen, um, well, the US dollar Japanese yen seemed to had I'm sorry about that. Let me just delete this line at this level. Yesterday we were talking about a possible move to the upside on the US dollar versus the Japanese yen. All right, and we actually broke with the previous highs, but then price on the US dollar versus the Japanese slammed, and this is the 1 hour chart. Let's go to the 50-minute chart because I want a very clear level where buyers are positioned. Again, this is a level that where buyers were found before we broke with the previous high. Sellers slammed price down, and we tested this level exactly, and we are testing that level exactly again. Now, in all fairness, this doesn't look very bullish. This doesn't look very bullish right now, but buyers are still being found around the 109.60 level, and that is a very important clue on where price might be headed. Okay, or where sellers are going to have difficulties breaking or of striping buy orders. All right, it seems that here is where high volume is being traded at the moment, where buyers are found. If we go back to the DXY chart again, let me thicken this out for you, and let's go back. Let's go to that 50-minute chart, because what we're looking at is the immediate price action on the DXY. And as you can see, let's get rid of this yellow trend line. All right. So as you can see here, we tested the 97.25 level, and right now at the open on New York, we tested it again, but buyers were found, and we are moving up. All right. So that big bearish move was nothing. It meant nothing unless we break with the previous low and have a clear close below the 97.25 level. All right. So this is a lesson on being patient and sticking to your trading plan. All right. You have to stick to your trading plan, because if you start closing trades before your stop loss gets hit only based on an immediate move in the market, without and going and closing that trade, going out of your plan and out of your analysis, you're going to start taking hits on your profitability, on your on your ability to make money. All right. So again, look at buyers. Buyers were found here on the US dollar Japanese yen. This is the 50-minute chart. Well, let's go back to the hourly. This is a big level on the US dollar Japanese yen. Um, um, I already said that this doesn't look very bullish, but still the level that sellers need to break in order for a continuation to the upside. Now let's look at the pound versus the USD, where it's at right now. Looking good again. Our analysis is looking good, and if we break with the previous low, yeah, we are going to change analysis. Let's have a look at the euro versus the US dollar. Again, a currency pair that I'm not really fond of, just because it moves so slowly. And it really moves so slowly because there's too much volume being traded in the euro versus the US dollar. That's why I choose to trade gold when I want to take a position on the dollar. I choose gold or some other assets sometimes. Um actually it's most of the time gold, but I do trade some other assets when I want to trade, or some other products when I want to trade the US dollar, and almost never the euro versus the USD. But so if you like to trade the euro USD, we're going to have a look at this chart. And again, the level to beat right here is this one. Let me just point it out. All right, so let me get rid of this. And let me get rid of this continuation patterns, because what we're going to do is we are going to be looking at US dollar, and we are going to retake our analysis in the chart. All right, purple is fine. So the euro versus the USD is a very, very difficult position, or a very difficult level right now, because in my opinion, it's no man's land. We have been trading up, and as you can see, we have been trading up and testing that 1240 to 1260 level, which I'm going to point out right now with a gray square. We have been testing this level, but again, it's so tiny. It is so tiny. It's just a 58 pip range between the top of the range and the middle of the range, which is the 18 or the 1180 level, or the purple line. To me, it all depends on the US dollar. So let's go back again to this chart. And I mean, price is breaking on the DXY. Price is breaking right now with the 97.25 level. And if we have a continuation to the downside, let me just zoom in to the 4-hour chart maybe. Yeah, if we zoom into the 4-hour chart, we're going to see some levels to the downside. Okay, that's it. So if we break to the downside, the next level that we need to focus on is the 97, which is this zone of previous resistance. It's high volume trading. Inside this wedge, before we move and broke with the 97.70. So the 97 is a level to be looking at. And if we move from the 97.25 to the 97 level, we are definitely on the euro USD going to be possibly breaking above. If we break above, again, what I would be looking at is just a break above, a retest, and a possible continuation to the upside on some very weak US dollar. But again, we also have some very dovish commentaries from the ECB, which would be bearish for the euro. So we need to define which of the two currencies is king here, and which of the two currencies is going to be driving the euro versus the USD. All right, and for the time being, I think that the US dollar is going to be driving price action right now. Now, on the premium channel, we are going to start analyzing oil. So if you are an oil trader, I urge you to join, because we are going to start analyzing not only Forex, but also we already do gold. We are going to start analyzing oil and some indices, mostly the Dow and the SPOOs. All right, the S&P 500. Now, if you can see here, let's have a look at the US dollar versus the Canadian dollar. Again, very choppy price action. Yeah, there was a possibility of a short position when we touched the high of the, but very choppy price action. Not a lot of directionality, and in my opinion, and there are better opportunities out there. Let's have a look at one of my favorite pairs of all time, which is the pound versus the yen. Now, this is a currency pair that really moves. All right, now we have hit the zone of support on what seems to be a gap village Let's thicken this out and let's see if this is in fact a gap village. All right. Yep. We filled that gap and then moved up. And the gap that I'm talking about is this one right here. The gap from February 15. All right. I think that was February 15. Let's have a look. Yep. From Friday, February 15 to Monday, February 18. So that gap we just filled on this upside, and now we have an indecision daily candle right here at this level, which is also the 75.6% of the A to B move. I'm going to be pointing out the A to B move for you guys because I know that sometimes it doesn't make sense just to say A to B move. So this is the low, the A point, and this is the high, the B point. All right. So this is where we are right now. Hold on. Is the 76.4% retracement of the A to B move. And if you remember, I already told you that when it comes to ratios, between the 61.8 and the 76.4% are my favorite. Look for a continuation of the move. We have a very bullish move. If we count this high, this low to this high, then we have we had another big move to the upside. All right. Now we have been moving down, but very slowly in what looks to be also a pullback before a continuation. We have filled that gap. We have hit the 76.4 retracement of the A to B move, which is the last leg of the entire move to the upside. And not only that, we have also hit the 161.8% retracement of the C to D. And I'm going to point out C to D for you guys right here, because again, it doesn't make sense just saying the C to B move without pointing it out. Here's the C, and here is the D on the C to D leg. Now, we have hit the 161.8 retracement well, remember that ratios are and support and resistance levels are not exact lines in the market. They are levels, all right? Or not, they're not exact levels, but they're zones. And we have hit the 161.8 retracement of the C2D move, which is, in my mind, not in my mind, but I mean, which are targets, which are these ratios are used as targets for some traders, and the reason that they do work as areas of support or resistance is because they are used by a lot of traders as targets. They are used like a lot of traders as targets. All right. The 161.8 C to D move because it confluences with the 76.4 and this previous level of support, resistance, and that gap. So I would be I would be very interested in looking for a buy opportunity here on the pound versus the yen. But again, we are trading in a very choppy and narrow range, which is this one right here, right? And right now, I wouldn't be a buyer or a seller unless we have definite direction in price to the upside or to the downside. Now, I'm going to wrap this up right now. I'm going to give you again that trial, that free trial. It's 1 month free trial, guys. And I assure you that it's going to be the best $1 that you're going to spend. And I assure you that you are going to be very happy with it, and you're going to continue with our premium community because you are going to get that edge that you need to beat the markets. And not only that, you are going you are going to be making money while you learn, and not making money while you learn alone, but you're definitely going to become a better trader if you trade with us and if you trade in our community. Not because our community is going to make you a better trader, but by sharing your charts and by looking at some other perspectives in the market, you are going to reach a level of analysis that you're never going to reach alone. So I'm going to wrap this up. If there's no questions, um, I'm going to see you on Monday. And again, I urge you to join the community. You're going to get notified there every time I go live. You're going to be the first ones to get my analysis, and most of the times the only ones to get my analysis, because uh, on Tradimos Premium Community is the place that I chose to work with and to share all my thoughts on the market. So, guys, thank you for joining me, and I wish you all a great weekend, and I'll see you on Monday. Goodbye.